Welcome to the club. My name is John. I will be your host for this meeting. I want to welcome everybody and thank those who have been coming by, visiting the club, and listening to the material covered in the meetings. So, in this meeting, we're going to talk about some of the material related to the investments that you will receive as an investor. Once you open up your account and you make a purchase, of shares in a mutual fund, a CD, or an ETF, or a bond, you are now an investor. And you will be receiving material about your investments. And one thing about in the investing world, as a do it yourself investor, you do want to get in the habit of knowing what your investments are, taking a look at what the investment mix is, as well as tracking the progress. You don't have to do it every day or weekly like I do, um, because I've been doing it for a long time. And I'll look at these investments. I usually check them based on economic data that comes out. For example, my most recent investment over at Fidelity with the FIDSX, I would check that once the banks announce their quarterly earnings to see if that has helped move that investment, just to see how well it performs. As well as if I hold it for 3 years and the $2,500 that I put in is not doing well, you know, the economy's doing well, other investments, I want to know because it may be best that I abandon that investment and move into something else. But the only way you're going to know is to follow and read the material. So, what we're going to do is recently I've gotten about a half dozen emails about the investments. And what we're going to do is we're just going to take a look at a couple of them and look at the material that is presented to you as an investor related to your investment. So I'm going to hop into it and we're going to look over some emails. Okay, so stick with me. My name is John, and you are with us at the Retiring Investing Club. Thank you. Okay, folks, so we're going to hit the email right here. And so what's going to happen is once you're registered and you make these purchases, you're going to get some emails. So I'm going to go through here and see. Here we go. So we got this one here. This is an investment I started, and I do believe it was 2021. And what happened here is I called up the folks over at E Trade, and I asked them to help me with an investment, and they basically told me that I needed to get out there and use the mutual fund finder and look for my own. And that comes with you being a do-it-yourself and having small amounts of money in your account. At that time, I think my account had 35,000, and I think the threshold was you need to have 50 or something. So now that's what I do. So what we're going to do is we're going to open this up. It's a PGIM Investments, and we're going to look at this technology fund. So I'm going to copy this and then I'm going to bring it up here. Now, this is the prospectus from the mutual fund. And then here it is. It brings that up. So I'm searching on it. They have many, many. So here we come and it brings up this fact sheet. So I'm just going to double click it and we're going to take a look at the prospectus. So here it comes up. Now, this is really, really nice. It's got the objective here. We always take a look at that and related to securities of technology or technology related companies. And if we take a look down here, it's got a Morningstar rating of 4 stars. Now, this, remember, I picked this out myself because I was told to. And that's something that you, as a do it yourself investor, you're going to hear that quite a bit when you start talking to advisors and things along that line. And these are the class investments here. Now, I have Chat GBT up. So what you can do is you can take a look at this and bring up and search on the investment class, and they'll tell you. Now, what I have is a Z, and when I looked up Z, it said it was an institutional. So what I'm assuming is that E-Trade has this investment as one of their selections as an institution, and they're selling me shares out of their pool, is what I think. I don't know for sure, but that's what I'm going to assume because I have an institutional class, and they require $100,000 minimum to invest. I just absolutely didn't have that. I opened this account up with like $1,000. The typical hypothetical growth of $10,000 is you're always going to see that, and it's got that starting at 618, and you can see how the investment's done. As we scroll through here, we can see that it does pay dividends, it does pay capital gains, and you're going to see the payout when they do pay out in capital gains or dividends. It's going to be the last week or in the month of December. That's when this investment will pay out. And if it's looking at the portfolio, and we've got the magnificent, it's going to be probably a magnificent five. So you got Nvidia, Broadcom is ICs, integrated circuits. They make chips. Microsoft, Apple, Netflix, HubSpot, Amazon, CrowdStrike. Now CrowdStrike took a hit in their company software due to some glitches that they had with some kind of update that was rolled out last year. You remember when a lot of the systems were down, the airports had problems. They couldn't display any of their flight information and stuff. Taiwan Semiconductors, and then you got Salesforce. So this is a very unique. So you got one, two, three, four of the Magnificent Seven in investment technology. Now, when I bought this, I got it at about $17 a share. So as you can see, if we go back up, it is trading at 2601, and its ticker symbol is going to be PGXZX. That's for this one. And my thing right now, since I'm trying to accumulate as many investments that have growth potential, I'm looking at investments below $25. And I got it here. Now, this one has been a big winner for me. It did get hit hard. It was off by about 30% at the end of 2022, but it came back as a gangbuster. I stopped investing in this and went to a money market over at VO Bank because I couldn't sustain the losses. It was just too much for me to stomach. But let's look at the last year gains here. So 37.57% for the institutional classes. And like I said, all these other classes, you can look this up under Chat GBT, and it will tell you which a class A, a class C. R6 may pop up, but it will say Z. I did specifically put in Z, and it said it was institutional. So there you have it. 37.57 last year. The year before that, it did very well. And because it was off so much after 2022, it actually had something ridiculous like a 70% gain. My investment was off 30%. It went, it regained the 30% back to zero, and then it went up another 45%. So this investment had about 75% gain. And had I continued investing and bought those shares at a low point, I would have a lot more money. I'm doing quite well. So that's one here. So we're going to do one more, and then we'll have a little chat about a couple other little things. So I'm going to go ahead and close this out. So this is the kind of information you want to get. Now, what I do is I take these ticker symbols and I start a spreadsheet on them because these pay out capital gains, and I'm looking to see how well these capital gains do and track them. And in another video, I will tell you why I consistently do that. It's you're going to be amazed at how tracking the capital gains can be so important. Okay, so we're going to take a look at one more, and then we'll just talk about um, these investments and what we can do with them. So these are two new investments here. This came in from Charles Schwab, and let's see. Here's a view to summary prospectus. So we're going to take a look at this one here. comes up, I've got a couple of investments in here. And again, we got the ticker symbol. So of course you would have that in the spreadsheet. And I went with an integrated US small mid cap core equity fund. And of course you would be able to review the prospectus here. It's got a lot of stuff in here. So you could just read through here. Here's the annual report. This report wasn't too bad here. It actually, right here, it says what drove the fund performance. So you will be able to look through here, and it talks about the little bit of reduction in the interest rates. That's pretty much out the window now. Because I don't know about you, but the prices are really, really high on simple stuff like a loaf of bread at Aldi's that was 50 cents has now doubled. It's 99 cents now. That's white bread. I go with the cheapest I can get. Um, so it talks about the performance again here, and the portfolio holdings. When you have time, you can go through this with a fine tooth comb and just get to know your investments. Again, I got into this investment because I had some other holdings that were not performing well, and I just liquidated them. If I remember right, over the years with Charles Schwab, I had a real estate trust. It didn't pay any capital gains, and the value today has not gone higher than what I bought it, and that was over a few years ago. Um, it's talking about the net asset value and the total return. So let's see. Year end of 2024, it had a total return of 16%. So this is how you can get to know your investments as you accumulate them. You read over these, you look at the companies. You may see that this investment has a company that has done you wrong. It's like, I don't want to invest in this anymore. It's got Domino's Pizza in there. This is kind of it's diversified. Um, the top 10 holdings, it's not coming up as well, but we know that we can go to Yahoo Finance, take this ticker symbol, which is what we're going to do now, and we're going to go to Yahoo Finance and we're going to toss that baby in there. And we're going to get a different view, a little bit more consolidated. Let's see if this bad boy comes up. Give it a minute to load. There you go, comes back. It did pretty good in December. And if we go, let's do the year to date. Let's see where it's trading. So it's down now, and this was its highest point here. We're going to do all, and there it was. And this would have been your ideal purchase time back in, whew, that was when we had the COVID, March of 2020. That's when the COVID hit. All right, let's look at the holdings here. Let's see what we got. There it tells you what it's investing in. And here you go. See, as you take your ticker symbols and you move around, you can get your information a little bit more consolidated. This would also pull up over on the Morningstar. Some of these companies I haven't heard of. GoDaddy, that is websites and licensings of the domain names for the websites. Mr. Cooper Group Incorporated, I've never heard of them. Webster Financial. And here's the mix over here. So this is a pretty good diversified mutual fund here. So you can see how you can expand yourself out, and it tells you that. Okay. So I'm going to come out of this and just give you some commentary about the retiring club and the investing club and where we're going with this. And I'll be back with you full screen. Stand by. So here at the Retiring Club and Investing Club, what we're just trying to do is give the average do-it-yourself investor some tips from someone who's been doing it on their own. I feel pretty privileged to be able to come on and put together some meetings. um, as I mentioned, I did a Google here in the Atlanta area, and there were no investing clubs. Actually wanted to go and be a member of an investing club with some of the older people who were talking investing, and I couldn't find one. And that's why I went ahead and started this channel, or segment off of Elton's retirement journey and travel, so that we could build up a catalog for someone who is starting to invest. Most people would look at those emails coming in and just trash them. I save them, I get a lot of them, but if there's a mutual fund that is not, or an investment not performing well, I can go in and start taking a look at that investment and make a decision. There have been at least a half dozen mutual funds that I have liquidated and moved into something else, trying to get that growth up. Having a mutual fund where over year after year after year, your your balance is hovering at the same amount is not going to help me much. I'm fortunate that the Charles Schwab account has gotten to just shy of 17,000. It's down at about 16,100. But my magic number is $20,000 in retirement, and I would need to have an investment that can produce that much as an income on every single year. Um, so that's why we're doing this, and I encourage you to subscribe and come back. Now, what we're going to be doing is we're going to be taking a deep dive into some withdrawal strategies and some tax strategies, so that as a do-it-yourself or investment, you're making 35 to 75,000 a year. You've got your car paid off. You got uh, decent cost on your housing where it's not spiraling out of control. How you can begin taking a close look at sustaining yourself without a W 2 income. W 2 incomes, there's a lot of people who are losing their jobs as of the start of March. And by the middle of the week, I want to start diving in to how you can access some of these funds, even if you're under 55 years old, what the expectations are. And I will talk about that in my experience on the next meeting of the Retirement Investing Club. Thanks for watching. My name is John. I encourage you to subscribe and give me some likes and some comments so I can help out with the research and delivering what you need as a do it yourself investor. Thank you for watching.